大家好. My name is Nick Langley. I'm a portfolio manager at Clearbridge Investments across all of the infrastructure strategies. Global listed infrastructure comprises regulated assets. Think poles, and wires and pipes across electricity and gas and water. These companies are monopolies and they're regulated. The regulator tells the companies how much they can earn. If they earn too little, they get to increase their prices. But if they're earning too much, they have to give some back to their customers. They're generally more mature from a financing and an operational perspective and pay higher dividends. They're at the defensive end of the equity market. The other component of infrastructure is user pays assets. Think about anything involved in moving people or goods around the economy. Roads, rail, ports, airports. We add in a little bit of communications infrastructure here as well. The pricing side of the business model for these companies is generally set by regulation or concession contract. But on the volume side, they're a little exposed to business cycles, whether it be passengers through the airport or cars and trucks on a toll road. That means from an active manager's perspective, we're able to tilt our strategy toward one side or the other of infrastructure to either protect or take advantage of different economic environments. That means that infrastructure is an investment for all seasons and deserves a solid allocation in balanced portfolios. We expect a challenged economic growth environment over the coming years. Infrastructure, though, are essential assets. They're used every day, whether we're in recession times or not. As a result, regulators provide returns to our companies based on their underlying assets, the connection between houses and the grids. This means that as our companies continue to invest in their asset base, even through recessionary times, we will see growth in underlying earnings and cash flows and dividends. That means that our companies will have very stable earnings and cash flow profiles and therefore will perform relatively better as we move through a recessionary environment. We are a team of specialist, global listed infrastructure investors. The core of our team comes from private markets and has experience across debt and equity capital raisings, project financing, regulation, engineering, and the like. This provides a range of different views and skill sets to bring to investment discussions, issue discovery, and portfolio construction. As a result, we expect better investment decisions than generalist investors. This specialization also flows into the investment process. From the initial screening of our proprietary universe through to the fundamental bottom-up driven analysis that we undertake on our companies, through to portfolio management, specifically understanding both the return side of an investment as well as the risk side to then combine into portfolios. We expect that the specialization within our team and our process will continue to deliver class-leading returns into the future. Across the infrastructure complex, we're seeing a significant increase in the growth profile of the underlying companies. What we're seeing is asset-based growth occur, and that's very important because as regulated returns remain relatively stable, we're seeing growth in underlying earnings, cash flows, and dividends. This growth in the underlying asset base is coming from long-term trends such as energy transition, the build-out of electric vehicle charging infrastructure, the continued extension of our poles and wires networks to take in new generation sources, such as renewables, and connect those into the grid. As well as, on the infrastructure side, the changing trade routes and infrastructure to support those new trade routes driven by the trend toward deglobalization.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书。富兰克林华美投信独立经营管理。